Summit Rajbal from Allied Mortgages. Welcome, buddy. Let's get right into it. Let's get into one of the most important questions. Where do you see right now the interest rate, and how do you see the interest rate affecting the buyers right now? Because everybody's talking about it.
Well, interest rates, key question. All depends on data. Now that the government is open, we're going to start getting data from the federal government. That's what's going to really determine where rates are going to be. I don't see much movement up until then, unless some favorable or at the same time unfavorable data comes out. Interest rate range is between 5.75, 6.5 in that range for now, in the near future.
I mean, we do see a lot of the interest rate right now at 6.35. I mean, that's what most of the websites are out there. But I did see some clients that close at 5.75 or lower. Now, how does that happen? Because I'm kind of curious about that.
Well, it depends on a lot of factors. One of the factors, for example, even today, state of New York, the Sonny Mae mortgage, we could get 5.6, 5.9. It depends what they qualify for. FHA loans, we can still get in the 5s, 5.6 to 5 in that range. It really depends on what kind of mortgage we end up getting.
So your honest opinion, where do you think the interest rates are going? I mean, because everybody has an opinion.
They're going down.
They're going down?
They're going down. Yeah.
Are you sure about that?
Well, if I was sure, I'd be doing something else. Based on the information that's available right now, it seems to be heading in that direction. If not before the end of 25, for sure, it looks like the first and second quarter of 26, they seem like they're going to go down.
Okay. And with your professional opinion, I'm going to ask you again, because that's really important. You've been in the business for so long and there's so many transactions. From the data that you see and from your professional opinion, you do see it coming down. Do we see a light under the tunnel? I mean, is that what we're seeing right now?
It does. Unfortunately, bad news in the economy means good news for interest rates traditionally. It seems like the economy is not going to be adding that many jobs. And if that's the case, the Fed might be forced to actually lower rates next month. Right now, it seems like there's 55% or so people that feel like, okay, rates will drop if the Fed will lower it in December. As that number grows up and we get the Fed actually lowering it, you'll see a drop in the long-term mortgage rates also.
Well, that's a good sign. Awesome. So the next question that I have is, are the lenders tightening up or easing on approvals? And what should the buyer prepare for before they apply?
There's no tightening or loosening really going up. As long as we meet guidelines, you'll get approved. What you should be pre-approval. I keep insisting pre-approval is really important. And you got to differentiate between a pre-qualification and a pre-approval. Some lenders will just take your information over the phone and not verify your documents and issue a pre-qualification. It's kind of dangerous. You're sometimes spending money for inspections and appraisals to buy a property. You're wasting time. And then at a later stage, you find out that, the loan is actually not going to be approved. So the first thing, get your pre-approval in. That's what I would recommend.
A lot of the lenders out there, especially the pre-approvals that I get, is always saying pre-qualification, and they swear that pre-qualification is like where they did everything. And from my experience, I know that's not the truth, right? And they always need documents, and some agents feel that, hey, this is it. I'm pretty sure they're putting that information out there to the client too. So you're saying pre-approval is more of a what than compared to the qualification again?
Pre-approval, like for example, when we issue pre-approvals, an underwriter actually reviews the loan.
Okay.
So all the documents are reviewed. Underwriter says, yes, the income is satisfactory, assets are okay. All we got to do is find the property's got to appraise, and it's got to be legally, like the title needs to be clear. That's where you want to be. That's the most ideal situation. So you do the heavy lifting up front. When you sign the contract, you know that you're through, basically.
Awesome. So pre-approval is where you need to be, guys, not pre-qualification, and we can help you with that. So what programs offer the best value today as a first-time home buyer, move-up buyer, and investors too as well?
Really good. First-time home buyers, I'll give you an example. State of New York offers amazing loans. They call Achieving the Dream, low interest rates, 5.6%, 5.9%. We can avail up to $20,000, 5% of the purchase price in a grant, which can be used towards closing costs or down payment. Really good. That's a great program for a first-time home buyer, as long as you're qualified. Eligibility is important. Where you're buying is important. So all that data up front, the more we get, the better we can obviously help in pre-qualification or pre-approval. Investors, terrific loans called DSCR, debt service coverage ratio. no income documents needed. You could buy under LLCs. Advantages of LLCs are you manage your liability on the asset. The loan doesn't get reported on your credit report. I mean, there's lots of advantages. Those are terrific loans that are really popular right now. And moving up, there's always, I mean, you can rent out your current residence and just move up to any property. I mean, you don't get grants on those, you don't get the first-time homebuyer benefits, but rates are still in the low sixes for those also.
That's awesome. And even if the move-up buyers, which is great, right? So you talked about that. Can they put down 5%, 10%, or do they have to put down 20%?
No, 5, 10 is good.
Okay, so we can get put down out there. And that's awesome, guys. Reach out to Summit regarding that, and we'll have his information. Thank you for that. We're going to talk about the 30-year and 50-year. Summit, we got this big buzz going on, everybody giving their information, and I'm pretty sure you guys probably heard it, but I want to hear from the expert too as well. The 30-year mortgage, I think there was a 40-year mortgage, and I know there's a 15-year mortgage too as well, but now we're talking about 15 years mortgage, now we're talking about 50 years mortgage. Explain the difference a little bit. Is it beneficial? Should a buyer get to a 50-year mortgage? What's your opinion on that?
Well, there's a variety of opinions. My personal opinion, I mean, from what I hear, first of all, the idea has been banned. But let's say if we consider it seriously, it just comes down to what's the interest rate differential going to be. Obviously, it sounds like, okay, it's lower payments, so affordability goes up. But I'm not sure if the payments are going to be that much lower based on my calculations, because as a term, like Ramin, you pointed out, there's a 15-year, there's a 10-year mortgage, 15-year mortgage, 20, 25, 30. As the term goes lower, as we have 15, we get a better rate. 30, we get a little higher rate than 15. So similarly, 50 is going to be a higher rate than 30. So if there's any benefit of a longer amortization period, that might be lost with the higher interest rate. And I'm not sure, because there's no market for that. So we don't know what the rate differential is going to be in order for us to really see, hey, there's a real benefit. Plus, psychologically, if a 20-year, 25-year-old is buying the 50-year mortgage, I mean, it's your whole lifetime before you pay it off. So I don't know psychologically if it's very attractive.
So would you just recommend, I mean, that's really qualifying for people who are first-time home buyers who don't have enough down payment. I'm thinking they want to become within that price point or the monthly budget they're trying to achieve. For the long-term wise, you're saying, hey, who's going to go for 50 years? You're going to pay a lot more out of your pocket. And do you recommend right now, right this instant, like buying down the interest rate? Or do you feel like, hey, get the interest rate, they always say, what is it? Don't marry the interest rate, but marry the house or something like that. I even forgot that. It's so lame.
Marry the house, date the rate.
Date the rate. There you go.
Yeah, a lot of people got a shocker on that, right? After 2022, but the dating period got extended longer and longer. But I mean, it comes down to the individual's plans. If you're going to stay longer in the house, I always say, as long as there's you're paying 1%, the rate's coming down 0.5%, it's a definite yes. It's definitely worth it to buy it down if you're going to live there more than 2 years. It just comes down to that particular time when you lock. It's always a good idea to buy it down if you're going to live there long.